If you are actively contributing to national pension scheme, then I'm 100% sure that you do not know where your money is going. To know that, watch this video till the end. So what I'm going to talk about today is the allocation that you do in your national pension scheme. But before that, do you understand what actually national pension scheme is? I'm sure you do. It is a retirement scheme floated by the government of India, wherein your money gets invested in different types of asset classes. Say for example, equity, government securities, corporate securities, and alternatives, right? So how can you save taxes through national pension scheme? So there are three provisions to do it, right? Before I tell you about the allocation in the national pension scheme, let me tell you about little bit about tax saving. So number one is through employer's contribution. If your employer is contributing to national pension scheme on your behalf, right, and so the limit is 10% of basic salary. So if the employer is contributing up to 10% of basic salary, that contribution will not be considered as a part of your income and will not be taxed. So you will eventually save a lot of taxes. Now let us take an example and understand. So the example is that if your basic salary is 10 lakh rupees in a year and you are in the 30% tax bracket, then what happens is 1 lakh rupees contribution that goes into national pension scheme towards your retirement, right? Because if you're doing an SIP in a mutual fund, you would rather invest in the NPS and also save some taxes today. Great strategy, right? So what you need to do is, so that 1 lakh rupees you straight away save 30,000 rupees taxes, right? So this employer's contribution concept is available in the new tax regime as well as in the old tax regime. So if you are in either of them, it makes sense. And if you are in the higher tax bracket, it definitely makes sense for you to start contributing. If your employer says, no, we don't have that provision, please tell him to start it, because it will help not only you, but a lot more employees as well, right? So force your employer to start it. Okay. Number two, what is the number two provision to save tax? In the old tax regime, there was a provision wherein if you contributed up to 50,000 rupees as your own contribution, you would also get the tax saving. So if you are not in the old tax regime, this is not for you. Then there was a third provision wherein your 80C contributions, right? You remember the 1.5 lakh rupees tax limit, right? If you contributed within that, then also as employees contribution, then that also was considered as a tax saving benefit, right? But that also is not available in the new tax regime. So only one benefit is available in the new tax regime, which is the employer's contribution, and which can lead to humongous amount of tax savings, right? Okay. So now that we have understood what are the different types of tax savings in NPS, and if you are contributing to NPS, you should know where your money is getting invested in NPS. Yeah? If you don't know where your money is getting invested, what is the point of doing this? Because this money will get invested for the next 20, 30, 40 years. If you are a 25-year-old today, probably this money is invested for the next 35 years. So you should definitely continue to contribute to this and make sure where your money is going. So when you set up your NPS account, there are two options. One is an auto choice and one is an active choice. And in auto also there are three options, which is aggressive, moderate, and conservative. So based on these three options, there is an auto allocation between the four asset classes that I mentioned earlier: equity, corporate bonds, government securities, and alternatives. But none of these choices are good for you, because equity allocation is lower in all these, and you should never ever select alternatives because they don't really have a history of generating higher returns. So what should you do? You should make sure, since your time horizon is highest, longest, what you should do is you should make sure that you contribute to equity at to the maximum extent possible. And how is that possible, you may ask, right? That is possible through the active choice. Okay, so in active allocation, what happens is you can decide how much you want to contribute to each asset class, right? In auto it is pre-decided, but in active you are someone who decides how much to contribute to each asset class, and you can play with it also when you think that markets are extremely overvalued or extremely undervalued, right? So for example, so what you need to do is, if your time horizon is the highest, there is a specific ceiling on the amount of money that you can allocate to a specific asset class, right? So you can only allocate up to 75% in a specific asset class, okay, and minimum is 25%. So what you need to do is log into the NPS website, use your PRAN and mobile number and generate OTP and log in. Once you log in, you will see an option to change the allocations, right? Go to that, select active choice, and you will see E, G, C, and A. Put 75 against E and put 25 against G and save, and immediately your allocations will change, and you will be able to change your asset allocation and increase your exposure to equities. This becomes very important, because folks understand this will be a part of your retirement bucket, right? And you want the maximum amount of money possible in your retirement bucket. There is definitely a limit of the number of times you can make these changes in a year. I'll put that in the screen description box below. but be aware that equity is the best asset class. Which fund manager to select, it does not really matter too much. All fund managers have a similar allocation and similar expense ratio to stocks, right? So expense ratio is similar, and the allocation to stocks in the equity portfolio is also similar. It's largely large cap driven portfolio, so it makes sense for you to stay invested in equities. And if you think that markets are overvalued, right, say for example, if nifty PE goes above 25 or 27, 28, right, that time what you can do is you can consider changing it to 75% government bonds and 25% equity, so that you will also save the portfolio from your drawdowns, right? But the best thing would be to consult a financial advisor for this, because financial advisor will also understand how the markets are looking in the future and what kind of growth is expected in the markets, and the valuations, are they reasonable or not. Because if you don't understand all these things, please don't do it yourself. I would highly recommend talking to a financial advisor. You can consult us, you can email me, or you can consult anyone else as well, but I would highly recommend doing that. So I hope this video made sense and it was useful for you. Do let me know in the comment section if you have any comments with respect to your NPS. Also tell me what is your current allocation and did you change it or not, because that is the whole objective of the video, right? I hope this was useful. Do not forget to share it with your friends, and do not forget to force your employer to start NPS contributions. All right. Thank you for watching.